Yeah. Still waiting on Ethereum. So, big change in direction for us today. We're going to talk about something super unusual. No, we're not. Of course we're not. There is only one story in town, isn't there, this month? And that is, of course, the merge. Is it the biggest technical development in crypto to date? Maybe. There's arguments on both sides. What is clear, however, is that this is a big deal, right? The technical challenges associated with trying to move the Ethereum blockchain from proof of work to proof of stake have been enormous. But so too are the potential benefits that this switch is going to bring, aren't they? Ethereum 2.0 is going to be faster, it's going to be more energy efficient, and potentially a more secure way to scale projects. Now, while broader markets remain under a whole lot of pressure thanks to big macro worries around inflation and lots of other things, ETH prices have been rallying in the lead up to the merge. Ethereum's price over the last 24 hours was up 6%, trading at over $1,600 as of 10 a.m. Hong Kong time Thursday. Ethereum Classic, meanwhile, logged more than 9% of gains, rising at more than $36. ETC's hash rate has also hit a record high as miners are looking for alternatives. Now this week, the penultimate upgrade, Bellatrix, went live. For those of you wondering about the name of that, by the way, no, it's not actually from Harry Potter as I had initially thought. Ethereum's consensus layer upgrades are actually named after stars. Upgrades to the execution layer, meanwhile, are named after cities. Paris is the last of those on the current blockchain. That will be completed with the merge, which is due to happen sometime between September 13th and September 15th. Now, it's fair to say there have been a few hiccups along the way, haven't there? Following some early celebrations after Bellatrix, some analysts did note kinks that maybe still needed ironing out. Martin Koppelman of Gnosis DAO pointed out that there was a missed block rate, which was something to keep an eye on going into this last upgrade. So, with just days to go, let's talk about these remaining challenges and whether there's other potential hurdles around price action, for instance, looking ahead. Feroz Medora from crypto exchange Gemini is here to talk to us about all of that. Feroz, thanks for joining us. From a technical point of view, can you just recap where we stand after Bellatrix?
I'd say the bulk or the majority of the Ethereum developers have been working extremely hard to make sure that all the upgrades, not just Bellatrix, are as boring as possible for people outside looking in. So for the average man on the street or guys like you and me who have our ETH holdings in our exchange accounts or our private ledger wallets, we didn't notice a single difference. And that is a remarkable feat of engineering. So Bellatrix in Paris for the second part of the upgrade, one is changing the consensus layer, and then we're going to be upgrading the execution layer for the second piece. I think the only real difference for the average user that we're going to see here might potentially be a pausing from most exchanges, Gemini included, in terms of withdrawals and deposits of ERC20 tokens, as they're taking the snapshot and cutting over from one to the other.
Let's talk about price action then. It looks to have had a little bit of a run up, doesn't it, ETH? But we're in a very difficult, broad macro situation, as I mentioned at the moment. How does a merge affect ETH price right now?
The broader market is going to be a serious consideration. We are facing some unprecedented headwinds in terms of high inflation globally, both in the US and Europe now, plus a rate hiking environment in the US and from the ECB, as well as just the general macroeconomic conditions around. That being said, if we rewind the clock the last 3 months and look at the relative performance, Ethereum is within a few percentage points, is effectively double from its 900 to 1,000 level to where we are now, around the 1,900-ish mark. Whilst Bitcoin, which if you may assume is a broader index of the general market sentiment, has probably moved around 20-25% in the same time frame.
Post-merge then, what do you think we're likely to see happen to ETH?
I think the biggest impact that the merge will have after it's launched successfully on whichever the block height it is, on the anticipated between 13 and 15 September, is we're going to see a key risk event being priced out of the market. And I think once it's successful, that's going to be a large narrative that's going to be in our rearview mirror. And specifically for Ethereum and the Ethereum ecosystem, I think the trends that will dominate will be what are the economics in terms of mining and transaction processing. That whole expression, what's a squeeze for the juice here?
So what now, Feroz, are the big risks? What are we looking ahead to in terms of that going forwards?
So one trend I think that has come to the forefront again more recently, specifically to crypto, is going to be the regulatory environment. We've seen a few statements from the Fed officials in the last few days around how they expect cryptocurrency to be regulated more like banking. Now, whether it's going to be the same thresholds that banking regulations face being cut and paste and just applied wholesale to crypto, or is it going to be more nuanced and more thoughtfully done? I'm of the opinion that the regulators thus far have taken a very consultative approach and are very supportive of the industry.
You sound pretty hopeful.
Well, I'm quite cautiously optimistic for the future here. Yes, it's been tough times, and I think it's no great controversy to say that this has been a remarkably tough year for everyone, not just in crypto. And it looks like the worst is behind us already. So cautiously optimistic for the future is my position.
All right, thanks a lot for that, Feroz Medora from Gemini talking to us there. The crypto winter has knocked off some $2 trillion in value from markets in just the last 10 months. But even though the chill has set in, those building tomorrow's digital ecosystems are still holding strong and in some cases actually optimistic. Colin Everin of Protocol Labs is one of those builders. He joins me now to talk about the opportunities he's still seeing. Colin, thanks for joining us. KPMG Report has recently talked about VC investment, $14 billion in the first half of 2022. I think that surprised a lot of us, given that we have been in the throes of this bear market. A lot of us are really wondering now, where are we in the current system? Where do we currently stand?
So I definitely think we're in a bear market. But I would say that our communities, the IPFS, Filecoin, libp2p communities have rallied significantly in every bear market. And so the growth that you would see in funding, adoption, scalability may not correlate to the overall macro trends. As a couple examples, IPFS has now grown through 3 crypto bear markets now. In the last one, the community significantly improved content routing performance, and the ecosystem of adopters absolutely flourished. libp2p was adopted by all the major protocols in the last bear market, ETH2, Polkadot, etc. And the core Filecoin research and implementation was built and launched during the last bear market. And that quickly made it the largest decentralized storage network, in a bear market, not in a bull. And so it's moments like these that kind of showcase and accelerate the core strength of the Filecoin community. And so, the lens I tend to put on this is not, hey, where are we in the bear or bull market? It's how do we continue to strengthen and accelerate the resilience of our community through these tough times?
So how do we characterize the sort of up and down then? Is there a different sort of cycle that we're seeing in that ecosystem when it comes to funding? And if so, what is really driving that?
Yeah, it's I think you have to separate funding from actual adoption in many respects. And so if you take a look at the Filecoin network in the last, since the beginning of the year when we started to see signs of this bear market, the amount of data stored on Filecoin has increased 5 or 6x to over 170 petabytes of data on Filecoin today. And so the usage metrics certainly are increasing. But that said, if you're a developer building a startup, if you're a storage provider, providing a core service to the network, it is harder to secure funding in a bear market. There's no doubt about that. And so really we have to help our communities weather the storm, conserve cash, get access to, investors or grants, etc., to weather the storm through this. But when you take a look at the actual adoption, the number of new developers entering our ecosystems, choosing to build on a Filecoin or IPFS, or the sheer amount of data stored on Filecoin, I'm seeing continued increases across the board.
So then, Colin, in that macro context and in the context of funding versus adoption, what are the real challenges that you're looking at in the next 12 months and beyond?
from a technical standpoint, the launching of the Filecoin virtual machine is a huge, important milestone in the scope of the network. There's already about $1 billion worth of decentralized finance, DeFi, and Filecoin already, but this will bring a whole bunch more tools to like unlocking that in the future. The FVM is completely EVM compatible, and so it'll work really nicely with Ethereum and allow a whole bunch of new use cases and dApps on the ecosystem. And it'll allow things like perpetual storage, which has been a really important feature of the Filecoin network that folks have been anticipating. And so when you think about like the challenges, my mind goes to how do we unlock the next wave of usability for our core protocols. And if we can do that, our communities have shown that they can be resilient in bear markets, conserve cash, raise additional funds, and make it to the next bull market.
Yeah, I think it's fair to say unlocking that next wave of usability is a challenge a lot of people are talking about in Web3, isn't it?
Yeah, I think one thing I would add is these kind of moments serve to accelerate the chasm that has really divided the Web 2 and the Web 3 worlds, right? And so, in bull markets, I think the Web 3 community thrives, but in its own little bubble. In a bear market, you start to really get Web 2 folks who are looking for core usability of Web 3 tech for their core use cases. And so for my advice to the IPFS and Filecoin communities is, hey, listen, how do we pull Web 2 users into the Web 3 sphere during this bear market? There is a tremendous amount of data sets from the Web 2 world, whether it's satellite imagery of the Earth, climate change data sets, genocide testimonial videos from the Shoah Foundation, and many, many others that are starting to use, things like IPFS and Filecoin and starting to cross that chasm. It's our opportunity in this bear market to accelerate that.
All right, Colin, thanks so much for that insightful conversation. We look forward to hearing from you at Phil Singapore 22 Summits later in the month. All right, that's it from us. Like and subscribe to this video for more content like it, and let us know your thoughts on what's happening in the comments.